Hello traders and welcome to another video review. Today is Monday, November 21st, 2022. Let's find out what is going on today on the financial markets. So as you can see, we got the Forex calendar here, and this Forex calendar is very poor in important data release. We got German PPI data scheduled for release at 9 o'clock. And the market participants expect this PPI producer price index to drop from 2.3% to 0.9%. And then during all day, we got all of the comments, speeches, and this kind of interviews from the ECB Supervisory Board, from the Bank of England members, and from German BUBA president as well. At the end of the day, we got data from the New Zealand in form of the trade balance, which is widening from minus 1.6 to minus 1.7 million. So it doesn't actually look very impressive, the calendar, of course. So maybe let's switch to the charts straight on. The first one will be, of course, the majors. Euro dollar 4-hour chart is showing us that the wave B is developing, so we need to cancel our arrow to the upside. The momentum broke the level of 50 already, so this is a valid breakout to the downside. So the target of 161 was almost hit. There is a miss of 43 pips only, and if we consider the rally here, the rally is well over 700 pips long, so 40 pips miss is not that bad. It looks like this is the top for the wave A, so we can cancel this 161%, and now we can focus on the wave B developing. We got some bearish engulfings here, some pin bars as well. So it looks like the bears are in control of this market temporarily, and the market is back inside the channel, moving out of the supposed to be some kind of a flag pattern or a triangle. So in that situation, the wave A has been done, wave B is developing, and we are waiting for another bounce from one of the technical supports levels, for example 1.0094. The targets for the wave C are here on the chart, and as you can see, they are a little bit higher than the top for the wave A, around 1.0600. So this is the outlook for the euro dollar. Looks very good for bulls, looks very good for future movement to the upside. Let's find out what is going on in the British pound. The British pound didn't hit the projected target level for the wave C. So for our chart, it looks a little bit more bearish, because we are still consolidating here between the level of 1.1770. This is the low, and the local highs were made around 1.1950, 1.1951. So it looks like for now the market is consolidating, moving sideways. Momentum once bounced from the level of 50. However, today we broke again below the level of 50, and if the market wants to retrace more, then the bears needs to break below 1.1739 and hit 1.1646, which is almost 90 pips lower. So this is apparently one of the possible ways of the correction to develop on the British pound. Looks good, however, for the bulls, yet at least on the 4-hour chart. And all of these movements here are being made in 3 waves, and were made in 3 waves before. So all of this insight subwaves, and the bigger subwaves, the bigger waves, I mean A, B, and C, are of course in 3 waves. In order to make it like a 5-way, the market cannot now go below the wave A high, which is at 1.1599. Any breakout of this level, let me just point it out for you. Any breakout of this level would mean that the top for the wave C is in place, and we are going back to that down trend. However, there is still a chance that after this consolidation, this correction, this some sort of the sideways movement, sideways trend is completed, there is still a chance for another rebound and the rally towards the target at 161% Fibonacci extension, which is located at 1.2073. So that's the British pound. Let's see what the other majors are doing. US dollar to Japanese yen. It will be good to switch to the daily. And daily time frame chart of the US dollar to Japanese yen is showing us that we retraced a lot, 9.40, around 9.40, and that might be, of course, the bottom for the wave C. There you go. So there is no doubt about it. It can be the bottom for the wave C, especially because we hit the extremely oversold market levels. However, if that's the 3-wave down movement ended with a pin bar, there is apparently no dynamic impulsive rebound made yet. So we need to break above 145 and then 145.91 in order to rally higher. So far it looks like the level of 137.08, 137.47 is the technical support. Might be important technical support. 3 waves down are completed. However, again, please notice the fact that this might be a very nice impulsive decline. This can be wave A or 1, 2 or B, and 3 or C. So as long as we move sideways and won't break above 145, which is why this is the key level for now, this might extend into the corrective sequence here, corrective cycle, and then break to the downside. So that would be wave 4 and wave 5. Okay, so still situation is not that clear at all. And last but not least, let's take a look at Bitcoin. Let's take a look at Bitcoin because Bitcoin is it keeps moving lower. We trace only 38% of the Fibonacci retracement, of course, of the last wave down. As you can see, let me just remove the other levels and switch to the 4-hour, and right now we are trending lower and lower. So there is a clear sideways trend, sideways consolidation for the bears, and a kind of an attempt to rally is being smashed down, and we are approaching the lows from the 14th of the November, 15,797, and the lows of the sell-off, which is at 15,550. So as long as we trade just above these levels, there is still a chance that the market will return to to some kind of a consolidation, maybe even bounce higher. However, it doesn't look that good anymore. This is the short-term trend line. It's supposed to be the support that was violated, and now we're trading below this level. The same situation might be said from the above, because we got this blue line, which is still interesting, still valid line. However, the market still trades below this line, and the key level to the upside, 17,600, once quickly tested. Bulls tried to rally, but then they were, of course, very, very strongly rejected, and now we are trading lower. Last but not least, very interesting situation on the Ethereum market, because the Ethereum market is right now approaching the sell-off lows, just as expected. This recent rally again retraced not even 50%, so we can now basically we can remove it, so we don't need it anymore. There's a bearish sandwich, pin bar tried to rally back to the demand zone, trading all of the weekend into the inside of the demand zone, and then break out to the downside. We are approaching $1,073 on the Ethereum, so the sell-off hasn't been completed yet. If you take a look at the RSI, you can see clearly that we bounced from the extremely oversold market conditions, however just briefly bounced above the level of 50, and we are staying inside the negative territory, where the negative sentiment prevails, where the bears have the control over the market. Recently just touched the level of 50 and were sent down again. So the outlook for the Ethereum is negative as well. For now, we are waiting for the test of 1073, the sell-off low from the 9th of November 2022. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.